So we're joined by financial expert Chuck Zodda from the Armstrong Advisory Group. Thank you for speaking with us today. The trade deals are here, and so is the market kind of bounce back. Have we officially returned to pre-tariff market prices?
Yeah, you basically have the S&P 500 back to where it was actually at the beginning of March now. So you've kind of backtracked pretty thoroughly there. We still are about 4 to 5% away from all-time highs on the S&P 500, so not quite getting back there. But obviously, you've seen a very healthy bounce off the bottom that we saw in early April. And now I think investors are waiting to see, kind of what the summer brings as these tariffs actually start to kick in and what their impact on the US economy looks like.
Do you feel like we are now on the other side of the recession fears? Is it not as big as a possibility it was a few months ago?
Well, I think given the walk back that we've seen in tariffs, it certainly is not as high of a possibility as it seemed to be in early April. And we were talking about some significant tariff rates. But I still think that given what we are seeing with a baseline 10% tariff that's being applied, you've got 30% tariffs on Chinese imports, 25% on autos. There still are some significant drags that could be placed on the US economy as these start to kick in really over the next couple of months. And so I do still think there's the potential for a recession out there. But, whether it's, 30%, 50%, 20%, I can't put my finger on, exactly how strong that chance is. But it still is something that we do need to monitor and watch just because the US economy, does still have some things to sort through as these tariffs start to really hit individuals and businesses. And we haven't seen anything like this in 100 years. So I don't think we have anything that we can rely on as conclusive proof as to here's exactly what's going to happen here.
Now, do you think is it going to hit any specific sector harder than another?
Well, I think what we're seeing in the auto sector is certainly pretty significant right now. It's actually pushed up used car prices pretty significantly already. There are fewer new cars being produced in North America now than this time last year. So that's one place that we're certainly seeing it. But I think beyond that, we're just going to have to wait and see exactly how this impacts the US economy because there are so many different permutations of how this could play out. And I think we also have to remember these tariff rates are not necessarily set in stone. I could see a world in which by the end of this year, they are higher than what they are today. I could also see a world in which they are lower. And so I think we need to be open to seeing how this evolves over the next, 6 months or so, but also understanding, hey, if there are further changes, how does that impact business confidence and businesses' ability to spend on investment in their business and its growth, given the uncertainty about where tariff rates and other economic policy could be 6 or 10 months from now?
After a bit of a correction, like the big tech stocks, are we looking at a comeback there?
Well, look, you've seen a massive bounce back on that side of things as well. It goes hand in hand with what we've seen in the broader S&P 500. I think the big question is going to be where do tech stocks go from here? Simply because so much of the trade with tech in the last couple of years was focused on artificial intelligence. And that was a trade that had started to wane at the last, few months of last year and into the first quarter of this year. So I think there's an open question there as to what that trade looks like and whether there is more growth there in the future, simply because there were some signs that you were starting to see a little bit of a slowdown in spending in that area. And I think that'll be something that we continue to monitor through the rest of this year as well.
All right, Chuck Zodda from the Armstrong Advisory Group. Thank you so much for joining us today.
All right. Have a great day.